Welcome, and here we're looking at a daily chart for the Dow Transports, and I feel like a bit of an ignog really because I should have been checking this a bit earlier, but the wave count here I've just sort of labelled here as wave 1 to here, wave 2 to here, and then wave 3 all the way up to here, with the 5 waves in through here to make the third wave, making this the fourth wave, and the fifth wave up here to make new highs up through to here. It could even extend up here further to, well, 7, 8 is a profit-taking number, so it will have some problems there, but it could extend higher from that particular point, and it would be gunning for that 8,000 up there in one way or another. And I think there's some quite large companies, 150 companies, got earnings coming shortly, so that would probably be the catalyst for that. But I'm showing you this because obviously this would help drive the S&P and the other indices to higher ground. So let's have a look at those. So looking at the S&P 500 here, we would have to coin this here, the fourth wave here of this degree, and looking for the fifth wave up through here of minute degree, of minor degree up through here. So we're looking at a 5-wave structure up through to here, and yeah, look, breaking this down here, there's a couple of ways to do this, but the important thing is that the market's trending higher, and the 1872, as we mentioned before, would be, support on that would be the catalyst for the upside. So when you're looking at the wave counts, or the wave structures rather, on the futures market and the cash market, they're slightly different, but making heads or tails of it in one way or another. The important thing is that it leaves wave 2 on this particular low here. So it does appear to have a nice sort of reasonable 5-wave structure to this point here, but on the cash market it would be at this point here. So at the end of the day, it doesn't make a lot of difference. What does matter is how we count this up here further. And what I can say, with the most important thing at the moment, is that being above 1872 is critical. The fact of actually being in group 2, as I mentioned, after traveling a long way from here, is a really positive thing. This is something that we're going through in orange juice at the moment, looking to add on to 65 here. So with that in mind, we can see that there was a nice little break above here and retest of support, which is the buying side of this, and then moving up through to here. So at 1880, which is the top level within group 2. Within group 2, there's a whole lot of other levels in here too that are important, like the 70, like the 73, the 75, the 78. They're all important if you're in looking at it in a micro sense. But this particular move through here, this would be looking at some type of A, B, and C across here, then support here, and then a move up through here. And that would also resonate with the Dow Jones being at 16,500. So the move up through here, we can expect this to come down in 3 waves here, looking for support. And this would be the buying section coming off the, give it plenty of space, but looking to purchase from that point there. But give it time, because these markets are moving into the overbought section of in the overbought daily range section. But you'd expect that approaching new, old highs as well. That's what those indicators do. The DAX, this is really quite a beautiful picture for myself, really, because we were looking at 95 yesterday, and if you could recognize on the 5-minute chart that that was corrective, then you would just be scaling in through 10, 20, and 30 through here. And at 50, midpoint, you'd expect a correction. Once you can identify it as a correction, and you got support, this is the simple A, B, and C here. So the arrival, the reaction, the first high above the level, the A, the B, and the C, then support. Then you would trade to, depending on what you're doing. So if you're, on a 2-minute chart scalping, well, then you would take money at part of the profit at 65, the rest of it at 72, and then wait for support. You get support support back in at 65, and then you'll be looking to add on 72 and also on 80 as well, and exiting here. But if you're a long-term trader, then just stay in this, because the pattern at 96 here is corrective. Okay, now with all markets, the psychology is this range here, group 2 and group 1, with the main number, the closest largest number, is the balance line. So you can expect swings within that range there. If the top of group 1, the 30, number 3, if that finds support, then you know you'll be moving up to straight to the upside, and you'll always be adding on top of group 1. The FTSE, it's interesting, really, because the FTSE is kind of leading the pack for a change. Normally it's the following, the follower, but this little 5 waves up here, which I thought was the A wave, and then the B wave back, and looking for 5 waves up here. And yesterday we pointed out that, this is actually looking really quite positive to the upside. And, as long as it stays above the 66.55, I call it, it is the midpoint, but it's also a 65 number, which gives it another layer of strength. And, the go yesterday was to look at 6,700. And, the next thing here, once again, we need to look at group 2, which would be 66, 65, 72 and 80. And then group 1, which would be 70, 67, 10, 20 and 30. So that range there, you can expect corrective swings within this area through here before we see any further upside. But the important thing is that the trend is still moving to the upside. Okay, the same with the ASX 200 as well. Yesterday we were looking for, once it was in group 2 here, group 2 is 65, 72 and the 80. Long as it's in that there, if it's sticking in there, then once again it's positive to the upside. We couldn't really work out I couldn't work out the count because it was just too messy. But it's a little bit clearer now. And the main point here is that this trend is going to be higher as well. Now, 5 is the second strongest number in the market after 1 and then 8. So 5 here, we can expect some sort of corrective swings in this area as well. And this would be the same as well. So 55, so it would have 10, 20 and 30 to the upside. And then we would have 80, 72 and 65 to the downside. That would be the swing zone for this market. But it also has further to move to the upside as well. I haven't actually pulled all this apart. I just haven't had time this morning. But what we can say is we can expect, even if this moves up here, we can expect some type of correction across here before we get a decent move to the upside. If you're long, stay long. If you're looking to get in, then buy new highs. And if 55.30 becomes the support, then you know that you're not going a retested support. Then you know that you're not going to get the larger correction here, and we'll just be tripping further to the upside. Because I haven't pulled it apart to see the count, but I can see that the count can just have a small correction here, back into the 90 or back into these orders sitting in here, and then move straight up from that. But the cash will lift it up on the opening, as you know as well. But it's priced in, so that group 1, the 10, 20 and 30 will become really sort of important, and you'll be always looking to see if you're getting support on those levels, and especially that 55.30. But the trend is up, and we looked at those stocks yesterday. CBA, Woolies, and a few others, and there's many in those sort of patterns in the market, and they still have further to travel, and that was a catalyst for us to hold long in this particular market. All right, thank you.